You're listening to REI USA Podcast, your prime resource for genuine real estate growth. If you want to jumpstart your real estate career, whether in active or passive investing, this is the right show for you. Join professional home renovator Stacy as she talks to REI USA teachers and expert investors willing to share their tips and tricks to get started in investing, sharing actionable advice in every area of real estate, all while putting legality, habitability, and safety above everything else. Combine their unparalleled advice with your strong drive for success, and that incredible real estate fortune will be yours. Now, here's your host, Stacy.
Hi, how are you, George?
Hello, how is everybody doing?
We're doing good. Thank you for hopping on and teaching us today.
Okay, very excited to be among all these distinguished panelists and experts on real estate investment. I think I'm in good company.
Okay, good.
All right, George Ansong here. I'm an investor, a realtor and entrepreneur. I've been in this business for a long time. Bought my first property in the 1980s in New York City when I took a no money down seminar. Bought properties in Brooklyn, New Jersey, before I moved over here with my family in the 1990s. I formed a company called Quadrant Investment with a partner that we bought, fixed and sold properties. I experienced the market crash in 2008, 2009. Lost some money, lost some fortune, but we came back. I have been teaching real estate investment in area colleges, including Kennesaw State University in the early 2000s. I wrote all my instructional manuals. I organized real estate mentoring and coaching programs for my students. We went on field trips. Currently, I have a company called GAV Capital Partners where we buy, fix, and sell properties. I teamed up with a construction company, Triman Enterprises. We have over 50 years in this business. Currently, I have written a book called The Cash Flow Real Estate Agent, a step-by-step guide to working with investors, and it's now on sale on Amazon and Barnes & Nobles. You can also check out my website at www.thecashflowrealestateagent.com. I'm also a real estate agent or realtor with Maximum One Realty, and my specialty is working with investors. Now, the topic that we're going to talk about is raising capital. Raising money, whether it's derived from investors, family, friends, or borrowed from commercial lenders, is one of the most crucial elements in any real estate transaction. I'm very, very happy when Stacy started. She said when she went to meet with a consultant, the consultant told her that one of the biggest area that he has to do was raising capital. And I believe with all my heart that is the heart of really being a real estate investor. Because as we all know, one of the limiting factors when it comes to investing is capital. The ability to raise capital is very, very crucial. And always remember that real estate investment is very, very capital intensive. I don't care how much money you have. If you buy 2, 3, or 4 properties, you're going to run out of money. So the key is, how are you going to be able to raise money if you're going to do a lot of deals? And that is the question. So in my view, an important skill to master is the ability to raise money. So that's why I'm very, very excited that Stacy, the founder, organized this virtual seminar so that some of us or the experts can also explain how they raise money. And I'm going to do my niche, how I raise money for my deals. So the topic is using fund money partners to fund your rehab deals, because I've been in real estate for a long time, but over the long time that I've done all kinds of different deals. But now my concentration is buying, fixing, and then selling. That is my construction. That is my concentration. So I'm going to use what I do as an example on how I raise money for my deals. So we are going to talk about soft costs in a rehab deal, understanding soft costs. What is soft cost when it comes to raising money for your rehab deals? I'm also going to talk about the numbers, rehab numbers, because in my view, before I go to convince fund money partners to get involved in my deals, I have to show them how the numbers look like. The next thing is structuring the deal. And I'm going to explain what I mean, the split funding, structuring the deal, split funding. Now, I said raising money with fund money partners. The question is, when I say fund money partner, what do I mean? A friend, a family, a business partner, or anybody you can tap into to raise money to fund your initial cost in a rehab project. So a fund money partner to me is a friend, a family member, a business partner, or anybody that you can tap into to raise money to fund your initial cost in a rehab project. Because when we are doing a rehab project, we have to have initial money to fund the soft costs. And I'm going to tell you what soft costs is as we go through the presentation. So in a typical rehab, you have soft costs that you have to deal with, because hard money or private lenders do not fund your rehab, and the soft cost has to come from somewhere. And that is where my fund money partners come in. Now, what are soft costs, you might ask? Soft costs are any expense item that is not considered direct construction cost. Soft costs are any expense item that is not considered direct construction cost. So soft costs will include like permit, for example, survey, engineering costs, arborist. For example, in Atlanta, if you buy a house and maybe you want to cut the trees and stuff like that, you have to go to the city for them to give you permits for you to cut those trees. So those are costs. Down payment, interest payment, dumpster rental, temporary power pole. For example, sometimes there might not be electricity in the property, so you have to go to the power company to erect temporary power pole so that you'll be able to bring electricity into the property. Trash removal, insurance payment, utility payment, miscellaneous. These are all what are called soft costs, and these costs, the hard money lender or the private lender, they're not going to finance that. So we have to raise the money from, like as a family member or business partner or a friend. We have to raise those money. It might be 60, 70, whatever amount that we need. So we have to raise this money for us to be able to fund those costs before we are able to go to private money or a lender to get actual funding. Okay. Now, let me just run through numbers to show you how, for example, in my rehab project, how we do. Normally, because I have a niche in what I do, most of my rehab, when we do it, we sell it for about $500,000 and more. So most of the money that we have to raise from the hard money from the fund money partners to be able to fund this, maybe we can rate about 50, 60, 70, 100, something, $100,000. But I'm going to use an illustration. But this is how we are able to go and convince our fund money partners to lend us some money. For example, in this case, we have a property that we are going to sell for $695,000 in an area that we are buying. These are the prices that we sell the properties for. And we use a formula that we call the Rule 70. So we multiply the after repair value, which is 695 by 70%, right? We get 489, 486, $500,000. Now the property that we're going to buy, the repairs going to cost us about $190,000. Okay, the Rule 70, the 486, 400 tells us how much we have to buy the property for and how much repairs we have to include in the purchase. So purchase and repairs comes to $486, $500,000. So we bought a property for $296. It's going to cost about $190,000 to repair. So the gross profit is $695 minus $485, $500,000. So our gross profit is for $208,500. So this is the gross profit that we're going to get. So we are able to convince our fund money partners that if they loan us X amount of money, $60,000 or $70,000 or whatever it is, we'll be able to pay them through the gross profit that we get. So before I go to a private lender or hard money lender, I tap into my fund money partners to raise the soft cost that I need for my deals. All right. So let's go to the next slide. Now, structuring the deal. Normally, we do what I call split funding. As you know, there are two basic ways to raise funds for a deal. We have what we call debt funding. Debt funding is where we borrow the money and you pay interest on the borrowed money. That is debt funding. We normally only do simple interest. For example, when we borrow like $60,000 from a fund money partner, might pay them, let's say, 3% interest, simple interest per month. So $60,000 per month will come to $1,800 a month. So for 12 months, if we borrow for 12 months, we go to all the fund money partners, $21,600. So that is the debt funding. And then we also have equity funding. Equity is where they participate in how much profit that we're going to make in the deal. For example, if the project generates about $100,000 in net profit, investor might receive an agreed upon percentage of like, let's say 10% interest, 10% equity interest. So investor receives 10% interest in the project. That equals about $10,000 or 10 times 100,000, $10,000. So investor will receive $21,600, which is the first interest that we pay them, plus the $10,000, which is $31,600. So if they invest, let's say $60,000, that is how much they're going to get at the end of the project. So in this case, their REOI, return on investment, is $31,600 divided by 60,000, which is almost half the amount, 52.66%. This is a very, very good return on their investment. So split funding is that we pay interest on the money that we borrow, and we also, as an incentive, give them interest, give them equity interest in the deal that we're doing. So that's how we structure the deal when I work with my fund money partners that loan us the initial money for the soft cost. And somebody said, how do we get our soft cost back? Whenever we go to the hard money lenders, they are able to, throughout the course of the loan, give us the soft cost, so we will have money for our fund money partners too. Okay, so they will get their money that they put in plus the interest that they get. And that's very, very important. Now, do's and don'ts in raising money from money partners or from partners anyway. In our view, and in my view, I think you should give as detailed information as you can to satisfy your fund money partners. You should give as detailed information as you can. And the information that we give to them is the property analysis that we do to let them know that they are going to get, there's enough money for us to pay them back. So that is what I mean by the detailed information, detailed analysis, so to speak. And so the next thing is that we let the project analysis sell the deal. All right, when you do the analysis, they know that you're going to make money. So that is what we use to convince them to invest in our deals. Another thing you have to realize that investors can sometimes be intimidated by too much information. So, I mean, we give them information, but we don't go into so much detail that sometimes they get intimidated and they get they get confused. I said, do not get into details unless requested. Remember always to give the potential upside. Another thing that you have to do when you're raising money is you have to consistently communicate with your investors, or they will assume the worst. You know how if you don't communicate with them, they might think that something is wrong or something like that. So you have to always, you can communicate by monthly or by week, whatever, by twice a year, whatever it is, but you have to let them know what's going on. It's very, very important. And I say, please do not wait until your investors ask for information. Keep all your investors partners in the loop, especially when you have good report. All right, let them know what's going on as the project go on. Don't wait for them to reach back to you. All right, because they always thinking the worst thing that could happen. So always take the initiative to keep them abreast what's going on. Ensure that investors know their objective. For example, can sponsor or can I make periodic cash calls should project run into difficulties. Sometimes a project might run into difficulty and you might need more money. So when you are pitching, you have to also say, listen, it's possible that we might come back to you to ask for some more money, and let them know that, because I mean, sometimes things happen. So you have to let them know that you might come back to ask for some more money. The next thing is always make provision for how investors can divorce themselves from their investment, and for someone to have the right of first refusal. We also try to make provision so that in case, for example, let's say a fund money partner invests X amount of money, and now we're supposed to give them the money in maybe 12 months time. Maybe in the third or fourth month, something happens and they want to maybe get their money back, right? We have a provision where they can let us know so that we can get any of the partner that is also involved if they want to buy, their interest in it and stuff like that. So we have to make provision so that in case anything happens, they want to get their money, they'll be able to get out of it. And the last thing is that the terms need to be spelled out succinctly, so that they know exactly what you did getting involved in. Because, I mean, things happen. So we have to know, hey, you'll be paid 12 months or 6 months or whatever it is. Everything needs to be spelled out. I want to talk about the case study now that I'm involved in. My group have been able to put together about $250,000 that we'll be investing in a new subdivision. If you live in that area, it's on 166 going towards Tyler Perry Studios, Stanton Road, that area. There's a subdivision that's going to come on, and we have the opportunity to participate in this subdivision. It's a little bit complicated, so we have to the funds, we have to hire an attorney to really put everything together, because it's the first time that we're getting involved in such a big deal. And the returns that the developer has promised us is pretty good. 33% of the net profit, and the net profit of the development is going to come to about $2.4 million, and we're getting about 33%. And apart from that too, they are also giving, because I'm an agent, a realtor, they're giving us, or me, or my company, about 7 units for us to sell. That is in addition to the profit that they're giving us. Apart from that, one of my partners that is also involved in raising the money is also he does flooring and stuff like that. And the developer is also going to give him about 16 units. The whole flooring, he's going to do that. That's how we are arranging the return that we are going to get. So when you are doing deals or raising money, you can structure it any way that you want. It doesn't matter. And I like to stick to pre-funding, because we're able to say, hey, listen, we can give you a certain amount of money on your interest on your money, and then you can also participate in the upside. Okay, so that's how I do my deals, and that's exactly how I raise money to fund my deal. Now, the majority of the money is going to come from private lenders, like I said, or hard money lenders. The bulk of the money is going to come. But the initial cost that we need, because if we're doing 3 or 4 projects, initial cost is $60,000, $70,000, $80,000. That's a lot of money. So we try to reach out to my partners, friends. Some people also recommend some people that might have money to participate in this. So that's how I raise money for my deal. Now, my name is George Ansong. I'm GAV Capital Partners. Is a company that I formed that work with investors, that partner with investors to do deals. This is my number, and this is my email. And I always, as an agent too, I have to disclose that I'm also a real estate agent, but my concentration is mostly work with investors. If there's any question, I'll be more than happy to. It's almost time already, but I'm more than happy to answer any questions that you have. Thank you very much for the opportunity to participate in this program.
All right. Awesome. Thank you so much, George. Great. Now tell everybody when you teach for REI USA.
The second Thursday of the month from 6:30.
Second Thursday of the month at what time?
6:30.
Eastern time in the evening?
Yeah, Eastern time. Yeah.
Okay. All right.
Yeah.
Cool. Okay, good. So yeah, so George can really help you with rehabbing, rentals, custom builds. So
What's the custom build yet?
Definitely.
Thank you for listening to this episode of REI USA. Let these golden pieces of advice clear your path towards thriving real estate success and start making those amazing financial opportunities work for you. If you liked this episode and want to get more of these valuable secrets, be sure to subscribe to the show at www.rei-usa.com. Leave a rating too and share with your friends. Until next time.